Hello, everyone, and welcome to another edition of Real Estate Realities with me, the Rebel Broker, licensed real estate broker in the state of California, member of the National Association of Realtors. But please, don't hold that against me. As you might be able to tell, coming at you from a different location than usual, right now I am on the beautiful island of Oahu in Hawaii, taking care of a few things here. Apologies for this show rolling out a little later than the usual weekly show. Had some technical complications, lots of noise where I am too, so it makes it a little bit more difficult. In fact, in the background, you might be able to hear the surf hitting the beach because I'm right on the beach. Wanted to hit some interesting topics this week. I actually had a whole other show created, but decided that the timing of it wasn't great, so we'll save that for a future show. So today, what I want to talk about are some things that are going to absolutely affect you as a seller, and I think also as a buyer. We're going to go ahead and cover two different articles here, but I want you to think about the kind of impact these sorts of numbers that we're about to talk about are going to have on your local market. Whether you are a buyer who is trying to find the right home, and this is really going to depend on your local market, but whether you're a buyer who has a certain number of homes to choose from, depending on whether or not the inventory is growing or shrinking for you, odds are it's growing. Or if you're a seller and you're finding more and more competition with more homes coming on the market, which is what's happening in my local marketplace here in Silicon Valley. And also for buyers, it's the same story. So I'm going to try to be a little bit more focused on how this is affecting Silicon Valley, since that's my local area and that's where I have the most knowledge. But these things that we'll be talking about are national trends that you can then see how much they apply to your local market and hopefully make some smart decisions based on that knowledge. Okay, so let's go ahead and jump in and take a look at home purchase sentiment. Has sunk to its lowest level in 11 years in September. This is a pretty big deal. These are numbers from Fannie Mae. And there's a few interesting bits of data here that we can kind of tease out. Now, Fannie Mae Home Purchase Sentiment Index fell 1.2 points in September to 60.8. Now, that's the seventh straight month decline and the lowest level since 2011. So also in your mind, kind of put yourself into what was happening in 2011. In 2011, we were not out of the downturn, the big real estate downturn that started from late 2006 through 2008. We were still seeing tons of inventory. We were still seeing, not folks being excited about buying, people thinking the real estate market wasn't really going to head into a recovery. This time period, 11 years ago, is just maybe as things were getting a little better, but these are crazy numbers when you consider where we were in 2011, at least in our local Silicon Valley market. The highest index has been in the past year at 75.5 in October of 2021. So just a year ago, it was at 75.5, and in 1 year, it's dropped 13.7% or 13.7 points. That's a dramatic change in public perception of the market in a very short time. For the first time since the start of the pandemic, a higher percentage of consumers expect home prices will fall rather than increase. And remember, these are expectations. So for you as a buyer or a seller, or as a real estate person trying to help your buyer or seller, this is mindset, right? This fits in directly with things we've talked about before relating to original list price on homes, what sellers expect their home to sell for. Everyone approaches these transactions, the real estate market, particularly if they're looking to purchase a home, with some preconceived notions, and these are the preconceived notions. So what does this mean for the market as we move forward? As we already see, we're continuing to accumulate inventory. We're seeing that prices are adjusting downward in terms of average sales price in many areas. It's happening more and more, and I think pretty soon we'll see across the board negative numbers in terms of amount of price increase from 1 year to the next. But that has yet to be seen. We did see it happen month before last for both Santa Clara County in general and for San Jose, which was kind of a shocker because I didn't expect it to happen so quickly, but it did. So what we see here is a high percentage of consumers who expect home prices to fall. They expect them to fall. So that would indicate that buyers, by some pretty large numbers, are not looking to step into the market to buy. They expect prices to drop. So in other words, if we're looking for who's going to be an active buyer right now or maybe next month, this tells us we shouldn't expect as a common thing across the country a jump in the number of folks interested in buying. These are folks who are going into wait and see mode, right? That's what this number tends to tell me. If it tells you something different, please, in the comments below or through my website at soldbyrobert.com, feel free to reach out to me if you're listening on the podcast. And for you listening on the podcast, if you'd like to see the video version of this, you can head on over to my YouTube channel and check it out there. So yeah, a high percentage of consumers expect home prices will fall rather than increase over the next year. A percentage of respondents who expect home prices to rise over the next 12 months fell to 32% from 33%. The percentage expecting a decline in home prices increased to 35% from 33%. So we now see more people expect home prices to decline rather than increase. It's just switched, right? So again, the psychology behind folks making decisions relating to real estate is shifting towards waiting because they think that prices are going to go down. We see here, I always hate it when, now for those of you on the podcast, you can't see this, but back in February of April of 2011, they show the last time that we had numbers like this, and the graph just jumps up, really tends to peak around 2019, and then in 2020 took a big drop, and then in 2021 jumped up again, and then has dropped again in 2022. What I hate is when they don't show the numbers prior to this. I would love to see, give me 6 months to a year before that April 11th date for sentiment to see what the trends were. Because I'm willing to bet that the sentiments were much lower before that date than it was on that date. So, all right. Now, only 19% of consumers surveyed think it's a good time to buy. So less than 20% think it's a good time to buy a home. And that's just consumers. So it may not necessarily be filtering out just for people who are in the market or who are potentially interested in becoming home buyers. But that's a giant number to wrap your head around. And again, fuels this idea that there are folks waiting in the wings to see what happens with home prices. It's down from 22% in August. Meanwhile, 59% said it's a good time to sell. So this seems like a good calibration in terms of the marketplace. More sellers, a majority of sellers, not by a huge amount, only by 9%, believe that this is the time that they should be selling their home. And I don't think those folks are wrong, given what we're seeing. And now I'm talking more in line with my local marketplace. I think this theory also plays out nationally. But I think a lot of folks are going to find that now is a bit of a sweet spot to get a property sold. So I know I'm in that mode. I know I'm thinking about selling property now before we get into next year. We'll see how that goes. But it's definitely a time where if I'm going to sell, if I was planning to sell within the next year or two, now would be the time to do it and to accelerate those plans so that you don't get caught losing more value before you end up making your sale after things have sort of crashed further. Next, I wanted to hit this week some numbers on multifamily rent growth. Now, this is a big one. Multifamily rents have always been the preferred method, right? You tend to make more. Your return on investment tends to be higher on a multifamily than it is on a single-family residential. And don't get me wrong, I think single-family residentials can fit into a portfolio amazingly for rentals, and I think that they tend to be a bit more stable. Literally the only thing you can do to improve your living situation if you're renting a single-family residential home is to buy one. So I think in terms of desirability, those single-family residentials are always at the top of the heap. And to take it a step further, I think they are also higher on the desirability scale. So if you're someone who owns a duplex or a triplex or a quad, your desirability is lower. And I've seen some duplexes that really feel like a single family residential, so there are exceptions to that. But if you're in that scenario, you are, according to this, seeing a softening in what you can potentially get. And when they're referring to multifamily rent growth, by and large, they're think apartment complexes. So not duplexes, not triplexes, maybe quads. Quads feel an awful lot like apartments to me when I'm looking at them. So you need to use your own local market knowledge or gain a little market knowledge in your local area to find out what's happening with multifamily rent. In my local area, I did not see a decline. According to clients I've helped buy multifamily properties over the years, locally we're not seeing that happening in Silicon Valley as much, but perhaps it's something you need to consider in your area. So make sure to be acquainted with that. I think that if you buy the right property, just establish a certain criteria that you consider to be important. And for me, I am not someone who wants to invest in the one bedroom, one bath, or studio apartment style buildings that are fourplexes and bigger than that, right? I think I like to build into anything I want to invest a certain amount of desirability. In other words, you're going to pick mine over other comparable properties. Now, one thing to keep in mind is that as a single family residential renter, I am not seeing any declines. I did not see a decline last month. I've seen nothing but increases. I track this pretty closely in Morgan Hill, Gilroy, and San Jose. And no, I'm not seeing any. I did not see a freeze. I did see a holding pattern for a month or two earlier in the year, but that could just be attributed to the cycle of folks coming in and going out of a rental property, since that also can frequently be a seasonal thing. But for the month of September, I'm not seeing any local indicators that folks on the single family residential side are seeing any kind of a slowdown in what they're being able to get for rents. Now, September 2022 National Multifamily Report was the point, quote, rent and occupancy rates flattened in September. Digging into the numbers, the average national rent was $1,718, and that was the same as in August of 2022. So the average didn't increase from one month to the next. Year over year, rental growth fell 150 basis points to 9.4%. National occupancy rates were steady at 95.5. So they're talking about a national trend of year over year rental growth falling. And that's just the growth, right? It's not the rent. It's the growth of the rent that fell by 9.4%. Or it fell to 9.4%. So in other words, the rent grew by almost 10%. Right? So let's make sure we understand that. It wasn't a reduction in rents. It was just a slowing in the rate at which it increases. So still an increase. Now, is this concerning? According to Doug Ressler, Yardi Matrix's manager, business intelligence, he told Connect CRE that certain fundamentals continue driving household to rentals. And these are all things I think you need to keep in mind. Increasing home values also feed increasing rental rates, right? As the affordability of homes drops, the willingness of buyers to spend money on those homes tends to drop, which pushes them more towards rental properties. But the points I think here that indicate a secure approach on the part of landlords for whether it's single family or multifamily are these facts, and I think they actually pinned it pretty nicely here. First one was ever climbing home values. Absolutely. Home values have gone crazy. I think we're going to see that change a bit, but I think it's offset by point number 2, which is increasing interest rates. Interest rates are not going to be going down anytime soon. And before interest rates are even going to be considered for reduction, the folks in charge are going to have to believe that they have conquered inflation, that inflation has been dealt with, because you fight inflation with increasing rates and you fight recession with reducing rates. And all the recessionary indicators are there, right? Whether the interesting thing is I was reading an article recently about the automotive industry, about what's going on there, and they were talking about all these trends that they haven't seen since the last recession. Well, okay, so as we keep seeing things happening that tended to not have happened since the last recession, I think we can all consider those new pieces of information to maybe clue us in that despite folks who want to deny it, we are in a recession. Single-family residential rent growth decelerates. The Yardi Matrix report indicated that while national asking rents for single-family residentials increased by 7.8% year over year, they decreased by 170 basis points month over month. Now, one thing that to keep in mind as well is renting is seasonal, right? You will sometimes find that the number of folks out there looking to rent drops depending on what time of year it is. Getting a new tenant in winter is typically tougher than getting one in spring or summer. So sometimes those seasonal influences can come into play, where a landlord may have to not raise their rents because they're in a difficult time frame in terms of the amount of demand for their properties. Now, again, that's a general statement that is not applying to what I'm seeing in my local markets. There is almost nothing available in areas like Morgan Hill in terms of single family residential homes where you're not paying less than $4,000 a month for say a 3 or 4 bedroom house. Or I think some of the best numbers I saw were 3,800 for one home. So not seeing any of the declines. On average, for 3 and 4 bedroom homes, just a few months ago, those prices were about $100 to $150 less. So again, while these may be great summaries for the nation, for our local Silicon Valley marketplace, we're not seeing it performing as they're indicating here nationally. And single family residential rent growth definitely has been on par with expectations in terms of landlords over the last year. Nationally, it increased 7.8% year over year. And I know that in some areas, and granted, there's going to be a limit on how much you can increase the rents for an existing renter. But I know folks who have purchased homes and comparable homes that were renting for, say, let's just use a round number, say $3,000. These folks, for the same floor plan of the home, since they were bringing in a new tenant, so they didn't have any existing agreements or any limitations to what they could ask for the rent, they were able to ask $500 to $600 more per month than that existing tenant who had a lease, say, for the year. So even folks who've only been in a lease within that year at, say, $3,000, same exact home gets purchased and put on the market as a rental 3-4 months later, and they're able to rent that for $3,500 to $3,600. So nationally, I don't think any of this is contradictory to what we're talking about in Silicon Valley. But for you as buyer, seller, and investors, I think that the critical part to understand is the psychology that's going to play into the next few months of our marketplace. Because nationally and locally, I think the same mindsets are starting to play a part. In my casual conversations with folks on the coffee line in Morgan Hill, or when, walking around in San Jose and having a conversation with clients, the idea is maybe we shouldn't buy now. And with all the buyers who I have running searches going for, I had several folks back out of searches because they just simply think this isn't the time to buy. They want to wait 6 months. So they've turned off their searches and they want me to turn them back on 6 months from now. So the psychology that I'm getting, the undercurrent of how people feel is definitely this isn't the time to buy. And I'm going to be honest, I think that given that psychology, if you are a buyer and given where interest rates are likely to go, I actually think that you are going to have a better opportunity over the next few months, even before the end of this year, to potentially get a great deal. You're going to probably get a better interest rate, and I still suggest doing that 30-year fixed rate mortgage, but you're probably going to have less competition based on the psychology that we're seeing reflected in these stories, and it will give you an opportunity to be more aggressive in your negotiations and potentially acquiring a home. And just kind of understand that at some point interest rates are going to go down because as we fight recession, the Fed will lower rates. I don't know if that's a year from now. I don't know if that's 2 years from now. But if you want to make what I think is a smart move, buy now before rates get even worse over the next year or two. Then when we're switching gears and fighting recession instead of inflation and interest rates are brought down, you can always refinance. For you sellers, as I keep saying, this was I know I should just put this on repeat. I think if you are looking at selling, you should accelerate your plans. If you were considering or planning to sell within the next year or two, I think you're probably better off doing it now rather than waiting. But of course, just like everything else, that's also going to depend on your micro market. I can't even give you general advice on Morgan Hill overall. There are some parts of Morgan Hill where homes are still selling for really crazy amounts and going quickly, and other areas where things are staying on the market a little bit longer. So I'd be happy to give you some one-on-one time to discuss the specifics of your property. Feel free to reach out to me at soldbyrobert.com to set that up. Right on the front page, there's a schedule a consultation option, so feel free to take advantage of that. And I'd also like to encourage everyone to check in with this month's Coffee and Real Estate that we're going to be doing this Saturday. We'll be doing it again from here. I won't be back in the home office yet, but I'll see how well I can run it with the limited resources I have here available. But I look forward to seeing you all there. Of course, the goal is always to leave more information on the table than I take up on your time. Hope I've accomplished that in this tropical Hawaiian season that I find myself in. Thanks for listening, and I'll talk to y'all next time.